Hey, it's Zachary at the Trade House, and in this week's Outlook, we're going to be taking a look at the US dollar Canadian, the AUDUSD, as well as the dollar index. As always, trading does carry an element of risk, and any actions that you take should be a result of your own analysis and decisions. We're here on Forex Factory just to get an overview of what's going to be happening in the fundamental side of things this week, and we can see that there is going to be some Japanese news starting off with a speech here when market opens at some point. And then moving forward, we do have the Australian dollar cash rate, which is essentially their bank's interest rate on Monday at 10:30 p.m. Eastern. Moving forward into Tuesday, we have Draghi, who is the president of the European Central Bank, speaking right in the middle of London session. We also do have a Canadian banker speaking, as well as Federal Chair Yellen in the afternoon for the USD. Wednesday, we do have the New Zealand dollar cash rate, something to be aware of. And then looking forward onto Thursday and Friday, just some more monetary policy and our typical unemployment claims. So, one thing to keep in mind is that daylight savings time happened today, which essentially the clocks went back an hour in a large majority of places across the world. And, for me personally, we're going to have to really just see how that's going to affect the market. We could back test if we really wanted to. For the purpose of this video, we are just going to hop right into the charts. So let me just switch on over to Thinkorswim, and we're looking at the dollar index right now on the monthly. And the other week in our outlook, we were identifying a certain level up here at the 95.5 marker. And if we come down onto the daily, we can see that we are approaching that whole area of confluence that we had identified. Now, let's see what this looks like on more of an intraday perspective. We can see that we are trading above our 200 exponential moving average. On NFP, we did have this one spike down to tap our 200 EMA, and then an immediate rejection throughout the afternoon back up to our whole high area that we have on the chart. So what exactly does this mean? Coming back to the daily, we can see that we do still have a bullish trend. We can see that we are approaching all of that confluence, our Fibonacci, our 200 EMA, that psychological price point, as well as a trend line that we've identified. So it would make sense for price to continue rising, make a high point up here, and then do a natural correction. Looking at the weekly chart, however, we can see that we did get this odd looking candlestick. For many, this could signal some bearish intention. And in my opinion, I do believe that while that is coming, it makes more sense for price to continue to rise. The reason why I say that is by looking at how price had been wicking down into this zone, and then on NFP seeing just how quickly price spiked down, and then immediate rejection to close off the hour, followed by this large bullish movement. It just leads me to believe that there still is more bullish interest in this particular market. And if we're going to be talking about how, what's happening right in here, some people may believe that this is creating an M, and, we've come up, we've traded, we've created the second leg, and then they'd be expecting the downwards movement. I don't think that that is the case for what's going to happen this week. If we were going to identify an area to the downside, it would likely be right in here at this whole 94 to 93.9 area. And we can extend that out just to see what exactly it looks like. Come on to the daily here. And I mean, this is definitely an area of demand at this point that we can see in the past, price has made some very strong movements away from. We had this wick here, and then of course the very bullish movement away. And in all of the times that we've traded around this area, price has gotten away very, very quickly. Now pay attention to how what happened right here on the October 26th candlestick. We did have a very large bullish push from beneath that zone right up through it. We gapped into the next day, created this, and now we've just been sort of ranging for the last couple of days. We're going to have to keep an eye on how this develops specifically. I do believe that with Yellen speaking in the middle of the week, if anything, by the time that she speaks, we would have already seen price push up into this whole range. So I'm expecting some bullish action to begin the week and then potentially to finish the week after Yellen speaks. That could be the signal that we're looking for price to do some sort of reversal. Now, with that being said, on the US dollar Canadian, we had taken a look at this the other week as well. For NFP, I was personally bearish on this, and I had entered a sell up at 128.3. So basically the high of this candlestick, if I were to put a price level on here, just to visually show you, this was my entry. So the high on the candle was 128.357. So very, very little drawdown, potential for over 100 pips just from the high to the low and what happened during the day. And really, if we're looking at this from the daily perspective, we still are in a bullish trend. We're going to go and hop onto the Renko chart. The Renko chart essentially measures price. It doesn't consider the time it takes. It only considers how much price action has occurred. For every one of these bars to form, right now the setting is set at 41.3 pips. So price has to move 41.3 pips in one direction in order for the candle to close and a new one to form. This is where I typically would draw my Fibonacci's, and because we are looking at this in 2017, we're going to take the high of 2017, come down to the low. We can see already our 38.2 right in line with where we are right now. And one other thing that we can do is take a look at the range chart. Now, the range chart is very similar to the Renko, as in it only considers price action. However, the key difference is that it has to move a specific amount of pips in either direction. So for this candlestick, for example, it still moved the same 41.3 pips. However, what happened was it came down, it traded, it hit that 38.2, came back up, closed in a bullish candlestick. For many, this is going to indicate some more bullish movement to potentially occur. And while I do expect that, I am looking for further movement to the downside before looking to enter some safer buys on this. Let's come into the intraday here. And we can see that we did push below our 200 exponential moving average. This was when NFP hit. So very large movement in that hour. You could have traded this and been done for the week if you had not taken any other trades, potentially, depending on your lot size and your risk tolerance, obviously. Now, where could we be looking at in order to enter some safer buys, perhaps even a sell to catch this on the way down if price continues to go lower? And really the first area that stands out in my mind is this whole range in here for what's been happening. But I do believe that if we look a little bit lower around the 126,200, right up into this whole wick, let's make it a 30 pip zone. So from 126.2 to 126.5. And we're going to extend that out just to get a visual on what this looks like. Let's come back to the daily. So we can see right here that this was a significant turning point for price to push down and create the low of the year. And then we've got this sort of V forming. Now, with the rejection off of the 38.2 and all of this extra wick, I do believe that there is more potential, as mentioned, for price to push lower, and we could find it coming as low as this whole range in here. The safest buy limit, in my opinion, would be anywhere in this whole range if we were to identify a certain price to consider the spread and everything else. Let's just say a buy limit at 126.4. Our stop loss, we're going to make it 25 pips. So let's go ahead. Let's duplicate that. Let's bring it down. Let's make it really precise. And our stop would be at the 126.15. Now, with that in mind, we can see what some potential targets could be. Realistically speaking, it depends on how big of a risk reward you want, and it also depends on your patience. But the price level that was identified here for the entry on our sell, this is looking like it would be a very good target. The reason why is because if we talk about supply and demand, and if we see how things played out on the intraday perspective, we could go ahead and we could draw up a zone of supply right in here. We could extend that out. And we can see what this looks like. And notice again as well, this does coincide with some key reversal areas back in 2015. Also, what happened here when we came down, touched it, and then continued up to create the high of the last 20 years in 2016. And then we can just see how it's been in play for now. We did have this one big push down in July beneath this level, and seeing how price had pushed down like this, it wouldn't surprise me to see price come, could even potentially do something where it comes back up towards this whole 129 range and then continues down to the buy limits. But this will just be something that I put into the market when it opens in 42 minutes from now. And I'm just going to allow it to sit there, be patient on it, and let it be one of those trades that I essentially forget about until I know for certain that it's either been filled or the market has moved in such a way where I no longer feel like it's a valid trade. Now, if you are the type of trader who wants to catch this move on the way down, there still is quite a lot of potential. Even from where price closed, you could be looking at over 100 pips just to the entry on this buy limit. And realistically speaking, right now could be the best time to enter the trade. Why I say that is because your stop loss realistically would be above the 127.85, so just above the high of this candle. Anything more would be unnecessary risk, because I would not see price coming back up, and if it did, it'd be coming up into here, if not just continuing on to come back up to the whole 129 range. But if you were to enter a sell right here, about a 30 pip stop, you'd be looking at over, well, just about a 4-to-1 risk to reward ratio down to the buy limit zone, with the 38.2 being a first target, and then anywhere within all of this consolidation being a second target. If we switch over to the AUDUSD, this is really what I wanted to look at most this week, simply because of the upcoming fundamentals. So let me go ahead, let me remove these drawings. Now we do see that we have a cash rate which is, a fairly significant fundamental event. On the daily, let's remove these drawings. We can see that we do sort of have this engulfing candlestick with a rejection off of our 200 exponential moving average. And just to clarify for new traders, because I know that there are people getting started with us every single day, the 200 EMA, essentially all it does is it takes the last 200 days of data and it compiles it into this line. Now, it is flexible in the fact that if we switch to an hourly chart, now it's considering the last 200 hours of data and plotting the line. So keep that in mind. You can be flexible and switch it up. If you put on, say, a 50 EMA, it would be taking 50 days. If you put on an 800, it would be considering 800 days. So it is one of those tools that it simplifies a lot of how price has moved, just to give you that average to look at. And with the AUDUSD, again, with how things have been progressing, at least in 2017, we are in a bullish trend. This was created when we made the low at the beginning of 2016. We've been ranging, slowly creating some higher highs, some higher lows, and really what we could be looking at right now, if we were to consider how things are playing out on the weekly with this bearish momentum, it would not surprise me to see price continue to go a little bit lower. And this is one of those things where, again, if you are looking to catch any potential trades on this, I do believe that right around now would be the best time to do that. And if you were to be planning a position on this of some sort, like I am, let's just say we were to enter at 765 to keep it simple. Our stop loss would be about 25 pips, right up at the 7675 zone. So we'll go ahead, we'll make this red just so that it's easy to identify. Turn that on. Do the same thing for this. Extend it out. And where could our targets be? My first target is typically always 50 pips. That guarantees that I'm looking at about a 2-to-1 risk to reward ratio from my entry, considering my stop loss. And where that would be here on the chart is right at the 7600 psychological level. Now this is a major quarter level. We will put target 1 on there. This is a major quarter level, and it's something that, realistically speaking, we could see be hit very, very quickly, and we could see price continue beyond into lower areas. Now, the places that make sense for me when I'm looking at this is right in the whole 75200. Right up to the 757 range. So that gives you a little bit of insight as to what I'm looking at for this week. I am expecting on the AUD for price to continue having some more bearish movement, at least early on in the week. And then after the fundamentals, of course, we're going to have to reevaluate. And trading, it is one of those things where the way that you analyze will be different than how I do. And when I look at my charts, a lot of it is just based off of the price action, naked trading, understanding supply and demand and why price is moving, and also what the key influencers behind that could be for any specific currency pair or other asset that I'm really deciding to trade. Something that I've been heavily focused on lately is Bitcoin and the US dollar. I've been trading that a lot. It is quite volatile. You could almost think of it like gold, but it is one of those things that I just feel comfortable trading, similar to something like the GBP USD. So hopefully you enjoyed this video. Let me know in the comments what you are looking at this week for your analysis. If you've planned out any positions here over the weekend, we do have market opening very, very soon. And as always, I would love to wish you safe and happy trading. And be sure to subscribe to our YouTube as well as our social channels in order to be the first to receive updates when we have new content coming out. There is a lot that we are doing here behind the scenes to give you the most value, and I am Zachary Hogan. Thank you.